My name's Larry Domenici, and I want to welcome you to Financial Management FN 312. I will begin by opening a document. As is our tradition at Eastern Nazarene College, we open our sessions with a prayer or a meditation. The power of God is universal. God is present everywhere. The power of God belongs to nobody in particular because it belongs to all of us. The power of God is waiting always for men and women for any good purpose in life. Our prayer is that we use the power of God to further the good purpose of our education. Amen. So once again, welcome to Financial Management. I like to start our course with, in this case, with this image. The body of water shown at the bottom of the photo is the Ohio River. That's the beginning of the Ohio River. And it only comes about because it's fed by the Allegheny River on the right-hand side of your picture and the Monongahela River on the left-hand side of your picture. So we have two significant bodies of water that are joined together and create a third body of water, which is also quite significant. This is somewhat like financial management. We could picture, instead of the Allegheny River, picture accounting and accounting tools. And as opposed to the Monongahela River, let's picture economics and economic tools. As accounting and economics intersect, we have the creation of finance. Without either of these two major disciplines, we don't have this larger, more encompassing field of study, the tool of finance. And it does come about as we take advantage of accounting tools and expertise and couple them with economic tools and economic experiences to create finance. Now, I like to, we'll get on to chapter 1 shortly, but I like to use real life experiences, and you'll find out, we'll look at corporations more so than any other study, structure of business in our study. And in this case, here's an example of a publicly traded company called United Rentals. The stock symbol for United Rentals is URI. I'd like to talk a little bit about this company today in particular because it's economically sensitive more so than many companies, driven straight out of whether or not we have economic growth or do we have economic shrinkage. During periods of economic growth, we have a lot of construction activity, renovations, etc., a lot of growth. That trips off a lot of use of tool rentals and machinery, which is to the advantage of the United Rentals Company. You'll find on Canvas, I've left you a PDF of this annual report for United Rentals. The annual report is something required by the Securities and Exchange Commission. If you want to have your stock trade on the greatest exchange in the world, the New York Stock Exchange, the heart of finance and the center of capitalism, then you need to file a Form 10-K annually. So says the United States Securities and Exchange, which has been in existence since 1933 following the Great Depression. One of the reforms that came out of the Great Depression was the need for more disciplined financial reporting. And part of the discipline that followed is the requirement that we have annual reports filed by companies. So we have the Form 10-K for the United Rentals here. Now, if you look at the beginning of the annual report, we're going to have a letter to stockholders. On an annual basis, at least annually, companies are required to report to their shareholders. And this letter to the shareholders comes to us from the CEO. It's jointly signed from the CEO and the chairperson of the board. In this case, our CEO is Michael Nealand, and the chairperson of the board is Jean Bertel. So they've penned this letter to shareholders. And as we look at the letter to shareholders, we learn that a lot of economic activity is being reported on, and a lot of financial accounting is being reported on in this letter to shareholders. Let me highlight a couple of things. Starts out by telling the reader that in 2018, the company entered the year in a position of strength with a large and diversified presence in North America. So the market for the company is in North America. During the year, during 2018, there were some acquisitions made. As we get deeper into our study of finance, mergers and acquisitions are focused upon. And in this case, this company acquired Baker Corp, a fluid solutions specialist business, and Blue Line, a national construction equipment rental company. For the year 2018, United Rental delivered GAAP earnings per diluted share, GAAP being generally accepted accounting principles, earnings per share of $13.12, compared with $15.73 in the prior year. On an adjusted basis, earnings per share was $16.26, significantly higher, compared with $18.64 in the prior year. GAAP's earnings per share and adjusted earnings per share for 2017 included a net income benefit estimated at $689 million, or $8.05 per share from the enactment of U.S. tax reform. So the CEO and the chairperson of the company are telling us that earnings per share came in this year at $13.12, the prior year at $15.73. So at first blush, it looks like 2017 was a better year than 2018. However, 2017 included a one-time adjustment due to the reform tax situation in the United States. So we take GAAP earnings and we adjust them for the fact that we have some one-time events in 2017 in order to better make a comparison as to how well the company did in one year versus the next. The company can't control tax policy. That's something controlled by the federal government. Minus tax policy, in fact, 2018 was better than 2017 on a GAAP basis. A couple of highlights: the company generated $1.1 billion of net income. We'll be looking at, in our study, the difference between income from operations, the difference from gross margin, the difference between net income and profit margin. Well, in this case, we have net income of $1.1 billion. Free cash flow was $1.3 billion. What is free cash flow? That's the statement of cash flows adjusted for the fact that once capital expenditures are taken place, what kind of cash flow remains. A very important thing for investors and creditors to know about. Moving on, although we had the tailwind of favorable macroeconomic conditions, meaning it was a good year in terms of overall economic growth in the country, our results also reflect our proficiency in capitalizing on demand. The merger and acquisition activity gave us widespread capabilities to serve our customers in a growth environment. We increased rental revenue across all regions, and we continued to foster organic growth. Organic growth means that if you look at the company prior to acquisitions and continued to model the company's performance without those acquisitions, organic growth increased. So the company would have, without even the acquisitions, continued to show an increase or growth in earnings, revenues and earnings. Furthermore, the U.S. equipment rental industry grew by a solid 8%. So economics for the industry were favorable as well, not just the country. While this company's revenues saw an increase of 10.5%. So now we learn that we had a company that did well in an economy that did well and in an industry that did well. So performance has been strong, both relative to the overall economy as well as to the industry itself. In 2018, in addition to allocating capital for merger and acquisition, the rental fleet technology and productivity initiatives, this is how they went about their capital spending. These are the big items, big ticket items they invested in. The letter points out that United Rental embarked on a 1.25 billion share repurchase program to provide further value to our stockholders. So in the future, the amount of outstanding shares for United Rental stock will have been reduced, which means earnings will be greater on a per share basis for every shareholder because fewer shares exist due to the share repurchase program of United Rental. So that's how the company has taken some of the power of their earnings. They've used them for mergers and acquisitions to increase their rental fleet, meaning investing in the equipment that they rent, and technology and productivity initiatives, as well as the share buyback. That's how they're using the excess funds generated from favorable performance. The letter goes on to talk about 2019. We expect to see favorable macro conditions continue in 2019, giving us significant headroom for profitable growth. External indicators for the construction and industrial activity are positive. So that the authors of the letter are telling us that they see good economic conditions in the future and feel the company is well positioned to take advantage of that. Finally, there are some descriptions of the current chairperson stepping down, the CEO of the company becoming the new chairperson, and the vacancy of the CEO position being filled by the current chief operating officer. All of those are board of director positions, and shareholders vote on the board of directors. So if you were a shareholder of United Rentals, you'd have a say as to who becomes chair. Let's look at the next slide where I've tried to summarize some of the highlights on United Rentals. This is a primarily US-based company driven off US experiences. Tools and equipment are closely tied to construction activity, which is tied to economic activity. The letter to shareholders is part of the Form 10-K. It's from the board chair and the CEO. And what do we learn? That GAAP, generally accepted accounting principle, earnings and adjusted earnings reported were strong. There was strong free cash flow, favorable macroeconomic conditions, good industry conditions, and the forecast is positive in the future. The ways in which the company have used the excess funds that were generated were in the area of merger and acquisition, costs, and capital expenditures. We'll find that Many of the things that many of these corporations report on and grapple with are in our course of study. Here are some highlights of the various chapters that we're going to be looking at. Principal subjects and objectives for study within our text. We'll take a little look at the field of finance itself and some of its history. We'll look at the role of accounting. We'll spend time on financial analysis and ratio analysis, which is a very important topic in our studies. We'll do some forecasting or budgeting, look at concepts of operating and financial leverage, examine working capital. We will study current asset management and short-term financing. We will spend time on the time value of money. And we will apply the time value of money in order to assist us in conducting some valuation studies and looking at rates of return. Finally, we'll look at the capital structure of companies and the cost of capital and some capital budgeting decisions. So anyway, that's a bit of an introduction, a little more on myself. I've now been, for a little over 10 years, teaching courses like this on an adjunct basis. This is the third college or university that I've spent time with in teaching accounting, finance, and auditing courses. You see my email. That would be the way in which you might contact me. I can make myself available before or after class and visit with you on Skype if you prefer. In terms of my credentials, I come to you with 7 years of materials management experience. That's buying, purchasing, and managing inventories. I had 15 years of internal audit experience. That's the independent and objective examination of accounting systems and operations. I spent 10 years as a controller, having a group of accountants work for me, and then 5 years as a treasurer for a good medium-sized company. So that's a little bit about myself. Please make sure you look at our syllabus. You're going to find that as well as some welcome messages on Canvas. You'll see session 1 outlined on Canvas. Please make sure that you take the time to complete all the assignments that are shown under session 1. Take some time and select a company that we're going to be analyzing. Here are several symbols. You can choose from these. Email me with which one you choose. AAPL stands for Apple, the great technology company. SLB stands for Schlumberger. That's an oil services company. URI is United Rentals. I already introduced that to you. TRN, Trinity, is a company that focuses on some construction activities and transportation. They make rail cars. They make highway barriers, things of that nature. F stands for Ford, the Ford Motor Company. MNK stands for Mallinckrodt, a pharmaceutical company. MDT is the symbol for Medtronic, the healthcare pacemaker company. XOM is the symbol for ExxonMobil, the oil services company. J&J being Johnson & Johnson, the pharmaceutical and consumer products company. JCI stands for Johnson Controls. They're an industrial company. And SJM is Smuckers, jams, jellies, and pet food. So consider which one of these companies you want to analyze. Look at the requirements that are shown for session 1 in the syllabus, and email me as to which company you plan on studying so we make sure we don't have overlap amongst our students. Finally, take a moment and consider what your goals are and what you hope to take from our course. I'd like to ask for each of you to report verbally on that in our second session. The remainder of this session is an online session. And our future sessions will be face-to-face. And with that, I would consider that our introduction. I look forward to seeing you next week. And have a great day. Welcome to class.